Hello everyone, this is Ben, and in today's video I break down my trade idea following the ISM Service PMI data. Quick, simple and straight to the point. Let's dive in. In July, the ISM Service PMI dropped to 50.1, which is below consensus and barely in expansion. New orders, business activity and especially employment all weakened, with the jobs index falling to 46.4, which is a clear sign of labor market softness. Meanwhile, prices paid surged to 69.9, the highest in 30 months, pointing to upstream inflation near 3.5%. But since these are input costs and demand is weak, many firms likely can't pass them on, and that suggests margin pressure from things like tariffs and not booming demand. With that being said, that disconnect, higher input costs while demand and hiring cool, made me lean towards the short side. And with that in mind, it was very simple to find my trade. It was around 600 ticks in the Nasdaq, so let's look at it. Here we can see the data which came out at 16 o'clock, and I waited for this little accumulation for the price to hit liquidity and for the aggressive sellers to step in. You can see this better in Bookmap, so let's look at that. So here we have this exact same picture, the data which came out, and this little accumulation which we see right here. We have the rebop right here, which was being rejected after we took this liquidity. So it was very simple for me to just go with this aggressive sellers, which we see in the delta. After this little structure was being formed, I placed my order right here. The SL I put over the top, and I managed it very simple. I had my target zone, which was the liquidity right here, and that's where I had my fixed TP. So feel free to drop your thoughts or questions in the comments. I love to hear your feedback, and if you found this helpful, give it a thumbs up and let me know if you like more videos like this. Bye bye, see you next time.